JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 17th of March 2022. So yeah, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, guys, the first one I want to pick up here is Nikkei 225, and yes, the index popped nicely to the upside yesterday. Of course, the day kind of circulated around the news from the Fed. Initially, we saw a bit of a decline, but I'll get to the U.S. indices in a bit. But let's say coming to this, I mean, Nikkei got boosted, yes, by the positivity that came in from the U.S. There we go. Looking at the technical picture here, you can see that we managed to break and stay above this downside line taken from the high of the 5th of January. Now, this downside line was a bit on the tentative side, don't get me wrong. I mean, it's not, let's say we only had like two normal touches here. And yeah, we broke it. So now let's see if we can stay above this downside line. If we can, then my next target is the 27,000 mark, and then I'll take it from there, guys. I'm not going to rush into anything. I'm just going to go slowly to the upside, and if we do clear and jump above that 27,000 mark, then my next target is the this green line here, the 108 EMA, which is currently roughly around that 27,500 zone, and then I'll take it from there. Shanghai Composite, very quickly on that one, we also got a nice push higher today. However, the issue here is that, well, as you can see here, it drifted back down. It's kind of now sitting just bang on that downside line taken from the high of the 3rd of March. Again, I would say it's quite a tricky move here. I mean, looking at this picture, of course, you want it or not, but it seems like there could be a possibility maybe for a move lower. However, if Nikkei, you know, we're expecting Nikkei to push a little bit higher, maybe the other indices to push a little bit higher, then yes, of course, we'll be very careful here, because let's put it this way: if suddenly today European indices and the US indices reverse sharply to the downside, then, well, this is where maybe the whole kind of analysis with Nikkei would suffer, and maybe we actually would see this one drifting back down. So I would say, if you're looking for, let's say on Nikkei here, if you're looking for some downside, wait at least for a drop below this 25,775 territory right here. And then, yeah, we could go maybe for a bit of a move lower. Maybe at the same time, we'd also get a break of this upside line taken from the low of 9th of March. So everything could kind of work out nicely here, you know, on the downside. But as I said, we need to see a drop below this hurdle for the downside. This is where I'm leaning to Shanghai Composite as well. So, I mean, looking at this, I mean, we could see maybe this one as a somewhat of a shooting star here, so maybe a good reversal. But again, let's not rush into anything, guys. At the moment, I would say yes. Let's keep an eye on the European and the U.S. indices today, and then they might kind of, you know, show the vector here for the Shanghai Composite. And for example, if we do drop lower today on the European and the U.S. indices, then we could see maybe this one drifting, the Shanghai Composite drifting a little bit more to the downside here, and maybe we also could get a, you know, like an open a gap lower here. But if to be honest, if we do get something like a gap to the downside here, well, then all this formation here could be forming a possible island reversal. So another thing to consider, another extra thing to complicate your lives, guys, basically. So at the moment, long story short, I'm just observing the price action here. If we do climb above the let's say today's high, which is roughly around that 3,260 zone, then yes, I'll go for a larger correction to the upside, because don't forget that we're still trading below this downside resistance line taken from the high of the 13th of December. Hong Kong Hang Seng, also good move higher. Yes, of course, everything's like, working out nicely here. And in general, looking at this picture, yes, you want it or not, you want to say that yes, we're going to be a little bit more positive than negative. However, I mean, given that we already kind of had that move here, of course, the cash index here was the kind of, we saw that huge move on the cash index. So the index when it opened tonight, kind of it drifted already nice. It gapped to the upside. However, we do have this 21-day EMA here still, so as a good potential barrier, and if it holds, maybe another slide could be possible. For now, I would say it's a bit of a tricky one. On one hand, yes, everything's looking quite positive. We do have we had a move above that 21,327 zone, so that's great. Yeah, if we do stay above this area, then I'll go for some higher levels. But again, for some higher levels, I would need to see a nice good push above that 21-day EMA here, and then it will slowly start, aiming higher. But again, keep your eyes on the the Hong Kong Hang Seng index is already closed. I think, if I'm not, oh sorry, no, it's still running. Do apologize. But yeah, we have around like 50 minutes left of trading, so let's see where that's going to end, but most likely it's going to stay somewhere around here. And yeah, keep your eyes on that 21-day EMA. Now, jumping into the European indices, DAX. So, of course, yesterday DAX got a good move to the upside, of course, getting fueled by by the whole kind of Fed day. Yes, looking at the cash index right now, for example, we are trading around 14,520 zone, so well, nicely above yesterday's close, but still below this 14,567 mark, which is the high of the 25th of February. So yesterday we got a hold up around there, just slightly below it. But can we overcome this barrier? Well, at the moment, I'm kind of keeping a close eye on it. If we do, then my next target is this downside resistance line taken from the high of the 5th of January. And if you remember when I talked about the German index recently, I said that in order for me to go for some higher levels, I needed to see a push above this 14,082 mark, which we managed to get. I mean, on the cash index, of course, not during main trading hours here, but yeah, we had that pop, so in a way, and that worked out. My target, well, actually, I could say already reached this 14,567 yesterday was reached. So now, the question is, can we go a little bit further north? Because at the moment, what I'm seeing is a very beautiful recovery here, but again, can this recovery be just seen as a temporary correction before another possible leg of selling? Well, let's wait and see. So for now, something like this could be possible. So now then, jumping into Euro Stocks 50 here. Yep, we pushed nicely above this 3,800 zone. I talked about this a lot, and there we go. So now we're continuing to aim slightly to the upside here. Can we go a little bit further north? Yes, we can. And to be honest, as long as it stays above that 21-day EMA, I'm going to continue aiming towards the 200-day EMA or this downside resistance line taken from the high of the 5th of January. Now, jumping into the S&P 500, guys. So here we had a fantastic move to the upside. Initially, we saw a an up move. So when the market opened up, we started rallying strongly. Then before the Fed started coming out, the market started reversing to the downside. And then after the Fed's decision, the market sold off heavily. Some of them are even traveling into kind of S&P at one point did drop below, into negative territory, but quickly recovered and managed to overtake the highs before that, at that moment, and then create a new high for that day. So, and at the same time, looking at this picture, you can see it managed to break this downside resistance line, which is a little bit on the tentative side. Don't get me wrong. This one taken from the high of the 4th of January, because in a way, I mean, some of you probably could be drawing something like here. And if this is the case, guys, then this is this means that maybe not all is that well with the with the kind of the near-term outlook. But let's put it this way, I'll stick to this line for now. And as I said to you recently, that if we do break this downside line, then and we pop up with that 21-day EMA, of course, as well, I'll aim for slightly higher levels. But initially, looking at this picture, I'm aiming for that 200-day EMA, or maybe this 4,416.17 territory right here, marked by the high of the, or should I say, the current highest point of March. So initially, I'm going to aim for that area, this 200-day EMA, because what I want to see here, and very, very curious if this is not going to end up being somewhat of a kind of a symmetrical triangle, something like that. So we know that sometimes they do like these formations, indices do like these formations. So yeah, again, this is just a theory for now, guys. Don't really focus on it too much, because initially what I'm targeting here is the 200-day EMA, and the cash index, of course, is a little bit on the higher side right now. So we do have a area near the 4,366, something like that. So we are basically somewhere around here, just slightly above yesterday's close. So yep, like I said, it seems that we are on the right track towards that 200-day EMA, and then we will take it from there, guys. Nasdaq 100. So the best performer yesterday, Nasdaq, and of course, is the same story. It was a bit of a roller coaster ride yesterday. I think if I jump into a 30-minute chart, you'll see this. So initially, when we opened up, we rallied strongly here to the upside, but then quickly kind of reversed back down, even dropped into negative territory a little bit, I think, here, and then we boom again, rallied and managed to hit that that psychological 14,000 mark on the actually after hours. It was a little bit, so it wasn't during main hours, it was after hours, just like after a few minutes after the closing bell. The cash index is currently sitting just fractionally above the 14,000 mark, and near the 14,010-12 zone. So yeah, in a way, I would say still everything's looking a little bit more positive than negative. Now, although let's say with the S&P 500, I am aiming for that 200-day EMA here. I'm not going to be aiming for that 200-day EMA yet. What I'm going to be aiming here for is this downside resistance line taken from the high of the 14th of January. Why? Because what I want to see here, if this is not going to end up being somewhat of a falling channel. So previously, if you remember, I talked about this idea of a possible falling wedge, which in a way worked out partially, because again, we didn't really see a stronger move to the upside yet. I mean, we did get a breakout here, so that's fine. We did get a close above that 21-day EMA, so that's also fine for the bulls. Now, like I said, yeah, we will aim for slightly higher levels, but as I said, I'll be very careful near this downside line, which could also be seen as an upper side of the falling channel. If we do clear that one and pop above the 14,342 zone, that's where it's going to become a little bit more interesting for a few more buyers. So keep that in mind, guys. For now, like I said, long story short, as long as we stay above that 21-day EMA, I'm going to continue aiming towards this downside line, which is the upper side of the falling channel. If that gets cleared, yes, I'll slowly go to the upside. DXY dollar index, so drifted to the downside. So Yeah, it seems like everybody was expecting maybe for the dollar to rally just because the interest rates got increased, but that was already kind of priced in. So it's just everything's here, to be honest, quite normal. We are sliding right now to the downside a little bit. Now, my issue here is that we're currently starting to range, and we are drifting to the downside. And to be honest, I'm leaning a little bit more towards the downside here, and I'm kind of aiming for that 21-day EMA or this 97.80 zone, which yeah, could be quite an interesting one, because if it, let's say, stays again here and then rebounds back to the upside, then yeah, we have ourselves a beautiful range. So that's why if you're looking for some upside, at least wait for a push above that 99.42 level. I talked about that already, so yeah, let's see how all this is going to play out, guys. For now, if you want to squeeze something out of this, out of DXY, I would say be very careful and keep your eyes on yesterday's low. And here, like I said, yesterday's low was roughly around that 98.30 zone, something like that. So if we drop below this, then yes, I'll aim for lower levels, but again, only up until this 21-day EMA, and then we'll take it from there, because again, I don't want to rush into anything yet here. If we do break this area, this 97.80, and then drop below it, then maybe this could confirm a possible double top pattern, which could be the case as well. So we need to kind of examine all the possibilities here, what could happen. So in other words, for now, as long as we're remaining here, I'm just observing the price action, guy. Evu, yep, I can see you in the chat room here. Yes, you're welcome. First of all, I hope you found it useful. Thank you, thank you. So yeah. Coming back to, oh, and by the way, guys, in general, if if you want me to cover a certain instrument, leave a comment after the video is uploaded, sitting there in our channel. You can leave a comment, and then I'll pick it up on my next video. So yeah, gold. Gold is retracing nicely to the upside, so that's fine. This is what I talked about yesterday, if you remember. I said that we might see a bit of a retracement, and maybe towards that 21-day EMA, which currently is perfectly holding the price from moving higher. And if it continues to do so, another slide could be possible. So for now, I would say if that's the case, if that's going to happen, if the 21-day EMA continues to provide resistance, then yes, my next target is the 1878 level here, marked by the low of the 24th of February. WTI oil. So this one is a tricky one because it's pushing back up. Yesterday it failed to even drop. It failed to even drop below the 93.56 level right here. So that's the current lowest point of this week. If we eventually fall below it, then yes, I'll go for lower levels. But of course, looking at this picture, guys, it seems that the oil does want to push a little bit back to the upside. And again, if we apply the similar story here, like with gold, I'm keeping an eye on this 21-day EMA. So at the moment, I would say we can get rid of this upside line. Didn't really work out perfectly, so I mean, some of you maybe have drawn something like this here. So if that's the case, for example, if this is the line to watch, then certainly this scenario could come in nicely here. For example, we could see a bit of a move to the upside, a hold up near the 21-day EMA, and if that happens, then another slide could be possible. So again, if we do consider this this upside line as a more feasible one. But again, let's not rush into anything. To be honest, I don't really like this line, but because it's just how we have a lot of empty space here. But hey, sometimes it does happen. So for now, let's put it this way: if we continue to trade above this 93.56 level, then we might see a bit of a retracement here to the upside towards that 21-day EMA. If the 21-day EMA provides good resistance, or maybe this 103 or in general 104 territory, if this provides good resistance, then another slide could be possible. But if it pops back above this and travels higher, maybe we're not really done with the upside, and we could see a bit more activity here from the bulls. Ethereum, very quickly on that one. So yeah, it enjoyed the it enjoyed the weaker dollar yesterday and today, of course. So I would say yes. I mean, it's looking quite attractive. However, we need to see a break of this upper side of the descending triangle pattern. As long as it stays inside it, we cannot really, get excited with the upside. So, in other words, if you're looking for some, buying activity here, more of that could come in on a break of this downside line here, which is also the upper side of the descending triangle. If it might drift higher. Also, what you should be very careful of, a false breakout. I mean, that happens a lot of times. So at the moment, I would say I'm just observing this one. Yes, it could present itself with a nice opportunity, for example, to go in right now, and it pops higher here, and but in that case, guys, I mean, if you are willing to, if you can afford to lose, then yes, I mean, there is a possibility here. However, as I said, with DXY, that if it drifts a little bit lower here, for example, and then rebounds and then pushes back up, then what we're getting here is just a range here. So yeah, it's a bit of a difficult one. So with Ethereum, for example, so that's why it might move a little bit higher here. But if DXY starts recovering, then yeah, we could see a nice move back to the downside. Jumping into AUD CHF. So I haven't looked at this one for quite a while, but basically when I previously talked about this, I said that if it rebounds from, I mean, it first of all, what I was talking about, that I was watching this downside line taken from the high of the 18th of March. We managed to break that, and we managed to move higher. Then we found some resistance around here near the 0.6861 territory, and then we reversed back down and found support near this downside line. So we tested it from underneath, and it acted as a nice trampoline here for another move higher. And there we go, boom. Today we're getting a nice breakout here above this 0.6861 level. So we're confirming a higher high here, a new high for March. Can it go higher? Yes, it can, as long as it stays above this hurdle. If it does, my next target is the highest point of October of 2021. USD JPY, very quickly on that one. That one's just in rally mode. I mean, it's just okay. If you're trying to short this, guys, I mean, I feel sorry for you guys, because again, this is a little bit tricky. And the problem here is that if the indices continue to drift a little bit more towards the upside, then yeah, this could actually continue sliding. Rising. The Japanese would continue sliding against the US dollar. Now, in other words, what we can do here, first of all, my target has been reached, this 118.66. I talked a lot about this level, so we managed to reach that. Now, in a way, if I want to look at the monthly chart, to be honest here, and as you can see here, we managed to clear this highest point of December of 2016. If we do stay above this area, my next target is the highest point of February of 2016, or even better, the highest point of January 2016, which is also the highest point of 2016. 121.69 level, that's the one that I'm going to be keeping an eye on. And if, like I said, if we do stay excuse me, if we do stay above this hurdle, this 118.66 level, then yes, I'll aim for higher levels. But for that, I would say keep your eyes on what's going to happen here at the end of the month. And if we do stay above this area, then yes, I'll be a little bit more comfortable with further acceleration. But if by any chance by the end of the month the body of this daily candle remains below this hurdle, maybe we could be due for a bit of a corrective move lower. And this is the point where you would need to keep an eye on the equities, because if we do start drifting lower here on the Japanese yen, or on the USD JPY, then yep, Japanese yen probably would come under, well, not probably, but would come under buying pressure. And that means that people would become a little bit more risk averse, and probably shifting slightly out of equities. So basically, for now, I would say yes, we're gonna aim for slightly higher levels on this one, but if suddenly it starts dropping back and stays below this 118.66 territory, that's where, you know, everybody should kind of take a bit of a pause and, you know, reevaluate the whole kind of, you know, their risks. GBP CAD. So very quickly on this one, I haven't looked at this for quite a while, but let me remove all the drawings here. But yeah, today, by the way, today we do have, I think so we do have in Europe, from Europe, we have the CPIs coming out, so that's going to be quite interesting to see what's going to happen there. But then we do have the BOE interest rate decision, guys. So also an expectation for a 0.25% increase in the interest rate. So let's see if that happens. If it happens, then to be honest, at the moment I'm looking at this picture, I'm going to remain a little bit on the neutral side, because what I'm going to keep an eye on here is something like this. So basically we're kind of getting into a bit of a squeeze, and I'm going to be waiting for a clear breakout through this, through this little triangle here, and then I'll take take a position, maybe depending on how this is gonna, move. If it's gonna start moving in a roller coaster fashion, then yeah, that's kind of that's not for me here. But at the moment, like I said, this is something that you can keep an eye on, and let's see today how it will react to the interest rate decision. Similar story with GBP USD. This one is a little bit more on the positive side. Of course, weaker dollar is helping here this pair, and we're seeing a nice move higher. But as I said before, I need to see at least a push above this hurdle, this 1.3195 zone, in order to go for some higher levels. Initially, I'll aim for that 21-day EMA, and then we'll take it from there. EURUSD. So this one is a tricky one. I mean, look at this. I mean, it just keeps on flirting with this downside line taken from the high of the 4th of February. Yeah, we did have a good break above this downside line. We did have a push higher, but as you can see here, it drifted back down. Can we go lower on this one? Well, I would say what you can do here is probably draw something like this, and currently you can see that we're stuck above this upside line taken from the low of the 8th of March. So if you want to get a nice drop below this, if you want to aim for lower levels, then yes, we need to see a break of this upside line, and then we could go to the downside. For now, if you're looking for a level, 1.5074 level, that's something that I'm keeping an eye on here, marked by the inside swing high of the 11th of March, and as you can see also it acted as today currently is still acting as a good area of support. So if we get a break below this, then well, that's where I'm going to aim for the upside. For the downside. For the upside, I need to see at least a push above the 1.5253 level right here, and then yep, we could potentially attract more buyers into this. And finally, EURUSD, also like I said, keeping an eye on the CPIs today, but at the moment, I mean, we're seeing a push back above the psychological 110 zone. So to be honest, I'm just observing this one. I really don't like what's happening right now here, and for me, let's say to at least again, it seems like we're coiling up, so at least a breakthrough one of these tentative trend lines. Then yeah, if we get something like that, then I will maybe consider the next short-term directional move. But at the moment, it's just moving around here, so it's not really very attractive for me. But again, as I said, yeah, if we do break one of these lines, one of these trend lines, then yeah, maybe we could squeeze something out of it. So keep your eyes on the economic calendar today, guys. So okay, thank you very much for joining in, guys. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your views, your likes, your comments, guys. I really do. So if you have any any requests, so you can keep you can leave a message, comment at the end of the video, and if you want me to cover a particular instrument. But for now, stay safe. Have your stop losses in place, and everything will be fine. And join me tomorrow, as always, at 7 o'clock GMT time. Thank you very much, and bye-bye.